You're smart, probably smarter than most people you know. This isn't arrogance. This is just fact. Your intelligence got you through university. It built your career. It solved problems other people couldn't solve. And that's exactly why you're going to fail at trading. While the guy who barely passed high school, who doesn't know what a derivative is, who's never read a trading book in his life, he's going to take your money. This isn't an insult. This is a paradox. And if you don't understand it, your intelligence will keep destroying your account while you watch people you consider less smart succeed. Let me show you why. Intelligence is a gift. Let's be clear about that. Your ability to analyze, to think deeply, to understand complex systems, that's beautiful. It's never a negative thing. It served you well in school, where understanding the material meant better grades. It served you well in your career, where solving problems meant promotions. It serves you well in life, where thinking ahead prevents disasters. So naturally, you assumed it would serve you well in trading too. You're smart. You can figure this out. You can analyze the patterns. You can understand the market structure. You can build the perfect system. That's logical. That's reasonable. And that's completely wrong. Here's what nobody tells you about intelligence and trading. It's not neutral. It's not even slightly helpful. It's actively destructive. Because every trait that made you successful everywhere else creates specific failure modes in trading. Your ability to see multiple perspectives, that can create analysis paralysis. Your need to understand why things work, that can cause execution delay. Your comfort with complexity, that's system overload. Your ego investment in being right, that's stubborn position holding. Everything that made you win before makes you lose now. And the worst part, you can't see it, because you're too smart to believe that being smart is the problem. You never look for the problem there. You assume there are different answers and miss the actual problem, because it doesn't even occur to you that your intelligence could be a problem. Let me show you what this looks like in real trading. Dr. Michael is a surgeon, 38 years old, saved hundreds of lives. Brilliant diagnostician. Decided to learn trading 2 years ago because he's smart. And smart people can learn anything, right? He approached it the same way he approached medicine. Study deeply, understand the mechanisms, master the technical knowledge. He read 12 books on technical analysis, took 3 courses on price action, studied market microstructure, order flow, institutional trading patterns. Built a system with 14 criteria because in surgery, more checks mean fewer mistakes. His system works. He backtested it. 62% win rate, 2-to-1 risk reward. The math is sound. He thought he'd done everything he needed to do to become a profitable trader and benefit from the markets. Now he could comfortably make money trading. But here's what happens when Michael trades the NASDAQ. A setup appears, all criteria met. QQQ is at support, showing bullish divergence on RSI, volume confirming, trend structure intact, everything aligned. But Michael can't take the trade yet, because he needs to understand why this particular support level is holding. Is it algorithmic? Is it retail? What's the institutional positioning? He opens 3 more charts, checks correlation with SPY, reviews the VIX, reads the latest Fed minutes to understand if this move is fundamentally justified. 2 hours later, he understands why the setup formed. He's ready to trade. But QQQ already moved 4%. The trade is gone. This happens 5 times a month. He's not undisciplined. He's too disciplined, too thorough, too intelligent for his own good. But by the time he takes action, the market has already started moving, because he's doing so much analysis that he can't move fast enough. And he really enjoys this, because it feeds his intelligent, analytical side. Consequently, he focuses more on the analysis part than on becoming a profitable trader, and this puts him at a disadvantage for trading. But he's not aware of it. He's looking for the problem elsewhere. Let's continue with another example. Now compare that to Jake. Jake is an electrician, never went to college, doesn't even know what algorithmic trading means. Watches a YouTube video about trading the S&P 500, learns one simple strategy. Buy when price bounces off the 20-day moving average with a bullish candle. Risk 1%. Target 2%. That's it. 4 rules. He doesn't know why the 20-day moving average works, doesn't care. It just works. Setup appears on SPY. He takes it. 3 minutes from seeing the setup to executing the trade. No research, no analysis, no understanding the why, just following the rules. After 6 months, Jake's account is up 18%. Michael's account is down 3%. Not because Jake is smarter, because he's simpler. And in trading, simple beats smart every single time. Listen to me carefully. Building systems and constantly analyzing might sound logical, but it's actually not. Because developing as trading knowledge doesn't mean you're getting closer to being profitable. Even the fact that the trading system you personally found belongs to you can be a problem. When things go wrong, this can hurt your ego. Because at the end of the day, it's your trading system that's losing money. So in some cases, using someone else's strategy to operate our system in our most objective state is not illogical at all. Because we don't have room to ruminate more and we're forced to focus on executing that person's system, the work shifts from being about personal failure or success. It becomes more about whether we're executing the available strategy correctly or not. You might be struggling quite a bit trying to operate your own trading system. And the reason for this might be that the trading system belongs to you. It might be the mission and meaning you've attached to it. Try not to make this part of your identity. We should approach this emotionlessly and remember that we're fighting a battle of being profitable, not a battle of being right. Let's continue with our story. This isn't because smart people are bad at trading. It's because intelligence creates specific traps that are invisible to the intelligent mind. The first trap is overthinking. Of course you overthink. That's what made you successful everywhere else. Medical school? You had to understand the pathology before treating the patient. Law? You had to understand the precedent before arguing the case. Engineering? You had to understand the physics before building the structure. Understanding why something works was literally the path to success. Your brain is wired to ask why. It's a beautiful thing. It just doesn't work in trading because the market doesn't care if you understand it. The market doesn't reward your comprehension. It only rewards your execution. And while you're spending hours understanding why NVDA is bouncing at this Fibonacci level, the trade happens without you. While you're trying to understand it, someone knows that it's a bounce point with a 67% probability of profit, and all they do is press the buy button when price gets there. And by the time you make your decision and take action, that person has already closed their trade. They don't need extra thinking, because they know that disciplined execution of a simple system is enough. They don't need extra confirmation. No need for more questions. We're already doing a difficult job. We shouldn't make it even more difficult for ourselves. Analyzing might make you feel productive. Most very successful day traders I know look at charts for a maximum of 30 minutes before the session to see potential scenarios for the trades they'll take that day. And during the session, if their strategies present themselves, they take the trades and close their screens. Most of them don't even exceed 3 hours of screen time per day. They don't even look at the screen unless alarms go off, because they know that more screen time doesn't mean more profit. They also know very well that maintaining their mental health gives them an advantage. They're not obsessed with analysis and being right. They just want the money from the markets that belongs to them, and they succeed in taking it. And most importantly, they do this consistently. The second trap is complexity addiction. Smart people think complex equals better. It makes sense. Throughout your entire life, the more sophisticated your thinking, the more you were rewarded. Simple answers in school meant you didn't think deeply enough. Simple solutions at work meant you weren't being thorough. So you learned that complexity is professionalism. And you brought that belief to trading. Jennifer is a corporate lawyer, 42 years old, partner at her firm. Brilliant legal mind. Started trading a year ago. She built what she calls a comprehensive system. It includes RSI, MACD, Bollinger Bands, volume profile, Fibonacci retracements, Elliott wave analysis, market structure, order blocks, institutional candles, correlation with the dollar index, commitment of traders data, economic calendar events, and sector rotation analysis. 14 different factors. All must align for her to take a trade. You'll appreciate that aligning 14 factors is not an easy thing. Consequently, it involves a lot of waiting and doing nothing, sometimes for weeks. And if you're not patient enough, tolerating this can be very difficult. So building a system with this many factors is not logical at all. First, it's not simple and effective enough. Second, because your system will materialize very, very rarely, it's very likely you'll disconnect from trading and mess around. In 3 months, she took 6 trades. Win rate? 50%. 3 winners, 3 losers. Net result after commissions? Down $200. Not because her analysis was wrong. Her analysis was often brilliant. But the system is unexecutable. By the time all 14 factors align, the trade is either gone or the risk-reward is destroyed. Meanwhile, her friend Tony, who owns a small auto repair shop, trades with 4 criteria: trend direction, support or resistance, candlestick pattern, risk-reward ratio. That's it. If you go on Twitter, new generation traders make fun of his system. But he's more profitable than most traders. He took 40 trades in the same 3 months. Win rate? 58%. Account up $2,300. His system is stupidly simple, and that's exactly why it works. Because simple systems are executable. Complex systems make you feel intelligent while your account bleeds. We don't do trading to stroke our ego and make us feel special. We do it to make money. We should remind ourselves of this. The third trap is ego investment. This one hurts because it's hard to admit. But smart people have ego wrapped up in being smart. You've been the smart one your entire life. That's your identity. Teachers praised you, employers promoted you, friends asked for your advice. Being intelligent is core to who you are. And that ego can't accept that a simple, almost stupid-looking strategy works better than your sophisticated, well-researched approach. David is a software engineer at a major tech company. Genius-level IQ, builds complex algorithms for a living. When he started trading, he refused to use simple moving average crossovers because that's what beginners do. Instead, he built a proprietary indicator combining multiple oscillators with custom volatility adjustments. Spent 6 months coding it, back-tested beautifully on historical data, started live trading on the Nasdaq. And what do you think the result was? Failed completely. Why? Because he over-optimized. Too many parameters, too much curve fitting to pass data. The market changed slightly and his genius system stopped working. But he can't go back to the simple moving average strategy. Why? Because his ego won't let him. That's what unsuccessful traders do. He's smarter than that. So he keeps tweaking his complex system, adding more parameters, more sophistication, more intelligence, and his account keeps shrinking. While Mark, who tends bar at a local restaurant and uses the exact simple moving average crossover David rejected, makes consistent money. Not because Mark is smarter, because Mark has no ego investment in complexity. If it works, use it. If it doesn't, drop it. No emotional attachment to looking intelligent. We're in these markets to make money. The fourth trap is analysis paralysis. Smart people see too much. That's literally what intelligence is. The ability to perceive multiple layers, multiple possibilities, multiple outcomes. In most fields, that's an advantage. In trading, it's a curse. Dr. Sarah has a PhD in mathematics, teaches at a university, decided to trade the S&P 500 to build extra income. She approaches a trade the way she approaches a theorem: examine from all angles, consider all variables, explore all possibilities. A bullish setup appears on SPY. Clear breakout above resistance, volume confirming. Momentum strong. She should take the trade, but her mind immediately generates 17 different scenarios. What if this is a bull trap? What if institutions are distributing to retail? What if the volume is actually lower than it appears when adjusted for time of day? What if correlation with Treasury yields suggests this is false momentum? What if the breakout fails like it did 3 months ago in similar conditions? While thinking about all this, taking action has become nearly impossible, because no trade can look flawless from every angle. If you search enough, you'll find a question mark or flaw in every trade. This is inevitable. We always have and always will have a margin of error. Learning to accept this is one of the first requirements of trading. Every question is valid, every concern is legitimate, and every single one prevents her from executing. By the time she's worked through all 17 scenarios, the trade has moved 3%, and the risk-reward is no longer favorable. She didn't take it. The trade worked perfectly. She missed it. This happens constantly. Not because she's wrong, but because she's too right. She sees too many possibilities. Meanwhile, Carlos, who works construction and trades during his lunch break, sees the same setup. His thought process? Breakout above resistance. Volume good. Take trade. 2 thoughts. 30 seconds. Executed. Profitable. He doesn't see 17 scenarios. He sees one scenario and acts on it. That's not stupidity. That's the gift of limited perspective. The fifth trap is the need for certainty. Smart people are used to control. Your intelligence gave you control in every other area of life. Study hard. Control your grades. Work smart. Control your career. Plan well. Control your outcomes. Intelligence equals control. That's been true your entire life. Until trading. In trading, you can be brilliant and still lose. You can analyze perfectly and still be wrong. You can do everything right and the market does something completely random. And this is psychological torture for an intelligent mind, because if intelligence doesn't give you control, then what's the point of being smart? Robert is a CPA, accountant for 20 years, loves numbers, loves precision, loves certainty. In accounting, if you do the math right, you get the right answer. Every time. Predictable, controllable. He brought that expectation to trading. He needs to know the trade will work before he takes it. Not think it will work, not believe it has a good probability, know it will work. So he analyzes until he feels certain, checks every indicator, reviews every time frame, confirms every signal, and he never feels certain enough, because certainty doesn't exist in trading. So he takes almost no trades. The few he does take, he's so overanalyzed that he's emotionally exhausted before even executing. Meanwhile, Rick, who drives a truck for a living and trades from his phone during rest stops, doesn't need certainty. He knows most trades are coin flips. He just needs slightly better than 50-50 odds and good risk management. Takes the trade. If it works, great. If it doesn't, next trade. No need for certainty, no torture. Just probability and execution. No headaches, no psychological ups and downs. He has a simple system, and he operates it. It's that simple. Simplicity doesn't just enable him to be profitable, it also allows him to trade alongside his actual life. Because he only needs a few hours per day, and he knows very well what he needs to see on the charts. We're the ones making trading difficult, and we need to make it ridiculously simple. That is, if we want to consistently make money from the markets. If what you want is to satisfy your ego and use the markets for your feeling of personal value, keep doing excessive analysis and using 25 criteria. You're on the right track. Here's what's happening. Smart people are using the wrong definition of intelligence for trading. In school, in careers, in most of life, intelligence means deep understanding, complex thinking, thorough analysis, and comprehensive knowledge. That works there. In trading, intelligence means something completely different. It means simplicity, decisive action, comfort with uncertainty, execution without understanding. And if you can't redefine what smart means in this context, you'll keep failing while calling it learning. So what's the solution? Not to become dumb, but to trade like you're dumb. And I mean that with complete respect. Trade like someone who doesn't have the curse of seeing 17 scenarios. Trade like someone who doesn't need to understand why before executing. Trade like someone whose ego isn't invested in sophistication. Trade like someone who's comfortable not knowing, because that's the only intelligence that gets paid in trading. Practically, this means simplify until it hurts. If you have 12 indicators, cut to 3. If you have 8 criteria, cut to 4. Make your system so simple that it feels stupid. That feeling of this is too basic is exactly what you're looking for, because basic is executable. Sophisticated is mental masturbation. Stop asking why. The 20-day moving average works? Great. Don't ask why. Don't research the mathematical properties. Don't explore the psychological reasons. Just use it. If it stops working, drop it. If it keeps working, keep using it. No understanding required. Execute before analyzing. This is the hardest part for smart people. Your instinct is to analyze first, then act. Reverse that. See setup. Execute. Then, if you want, analyze afterward. But the action comes first, because in trading, thinking costs you money. Acting makes you money, except that you don't know. Say it out loud. I don't know if this trade will win. I don't know why the market did that. I don't know what happens next. Get comfortable with those words. Because in trading, I don't know is wisdom, not ignorance. And finally, kill the ego. Simple doesn't mean stupid. Complex doesn't mean intelligent. Profitable means smart, regardless of method. If the simple strategy makes money and the complex strategy loses money, the simple strategy is the smarter choice. Your ego might hurt. That's okay. Let it hurt. The market doesn't care about your ego. It only cares about your execution. You're smart enough to understand every word of this. You're smart enough to see yourself in these examples. You're smart enough to recognize the traps. But here's the real question. Are you smart enough to do the dumb thing? To take the simple trade without needing to understand why? To execute with 4 criteria instead of 14? To be comfortable not knowing? Because that's the only intelligence that pays. Everything else is just expensive overthinking. and the choice is yours. Keep being smart the old way and stay broke, or be smart the new way and start winning. The market is waiting, and it doesn't care which you choose.